Hello, hello. My name is Glenn Ford Robinson, and thanks for tuning in to Mstardom Finance. This is my new video channel, and I'm pretty much going to be talking about the economy. I'm not a professional advisor, financial advisor as yet. However, whatever I say now, don't take it as investment advice because pretty much if you're not licensed, you don't really know what you're talking about. Yeah, but this is something that I enjoy doing. I keep abreast of what's happening in the economy. I write a weekly article telling people what I think about the current state of the economy. I have a Facebook group. It's called The Book That Changed My Life by Think and Grow Rich by Napoleon Hill. And that's my Facebook group. So if you want to join and check out all the little updates that I provide, sometimes I see some really helpful articles. I would post it in the group so people will understand and see what's happening, so forth. All right. And I write a weekly article about the my opinion on the state of the economy. So I post when as soon as I write the article, I post a link in my Facebook group, and that's how I let my people know what I think about the economy. My friends, I do have some people who follows me and listen to what I have to say in regards to the economy. And by the way, I'm a forex trader. I rather to trade the forex market as opposed to the stock market. The stock market I use as investments. The stock market and um, the cryptocurrency market I use mainly as um, investment. I don't trade the stock market, and I don't trade the currency market. I just buy and hold. That's it. But when it comes to the currency market, forex, yeah, man, I trade. I love that market. It's not easy. It's not for everybody. And my disclaimer is to let you know: don't take what I'm telling you here and use it as investment advice because pretty much if you're not licensed, you don't know what you're talking about. All right, and I don't know what I'm talking about. All right, and I don't remember if I had told you that my name is Glenn Ford S. Robinson, and thank you for listening, and thank you for tuning in to my Mstardom Finance channel. All right, I'm passionate about making money. So people who knows me, they know. Some people call me Mr. Millionaire. They call me the Millionaire. They call me Mr. Money, Mr. Money Man, the Money Man, everything, man. So I just cannot get away with it. It's in my card. It's my. I'm Scorpio. So dealing with money, talking about money, handling money, that's just my thing. You know what I mean? Yeah. All right. Let me go over the article that I wrote for this week. It's called, the title of it is The Federal Reserve Cut Interest Rate by 25 Basis Points this past Wednesday. And I posed a question, why? Why? All right. The U.S. Federal Reserve cut interest rate as expected because everyone was expecting it. But why did they do that? The Federal Reserve Chairman Jerome Powell said in his FOMC press conference that FOMC is an abbreviation for the Federal Open Market Committee. So he said in his press conference that he wanted to make sure that the U.S. economy remains in its current expansion phase. So he and the Federal Reserve cut interest rate by 25 basis points to support that objective. So even though the current outlook is favorable, according to the Fed chairman, Mr. Jerome Powell, he still cut interest rate. The average person would think that the only reason why the Federal Reserve is cutting interest rate or cut interest rate is because the economy is heading into a recession. Um, why would a mechanic repair a car that does not need repair? Huh? That is the reason why many Federal Reserve officials are against cutting interest rate. Because it's not everybody who's you know who agrees with the cutting of interest rate. Opponents of interest rate cuts argued that the Federal Reserve should not be cutting interest rate because the economy is healthy. It's in a healthy shape right now. Popular opinion seems to think that the only reason why the Fed cut interest rate is to participate in the currency war. You know, so it has to be a reason why the Fed is cutting interest rate. So people are speculating, and so I'm saying globally, economies are economies. I can't speak. Global economies such as the eurozone have kept interest rate at 0% for many months now. So globally, there has been a lowering of currency movement, and that is the reason why the U.S. Federal Reserve has been cutting interest rates. In fact, the way things look, there will be another round of interest rate cutting in the near future. So pretty much what I'm saying there in an article is that other countries are cutting interest rate to compete with the U.S. They're purposely lowering their interest rates, their country's interest rate, in order to be able to sell products to the U.S. because the U.S. Everyone looks up to the U.S. and the U.S. dollar is always the strongest. So investors use the U.S. dollar as a safe haven. There's a term that they use in the financial industry as a safe haven. That means people, if globally, if the global economy doesn't look promising, people will normally put their money into gold. And if they think that the U.S. economy doesn't look all that great either, then they'll put their money into gold. Did I say put money in gold? Well, I meant to say many investors would put their money into the U.S. dollar, into the U.S. dollar, if they think that other economies aren't doing so well. And if those investors think that the U.S. economy isn't on equal footing or it's not very strong either, then they'll put their money into gold and all that stuff. And by the way, I've seen situations when investors think that the U.S. dollar is not doing so well, and all of a sudden Bitcoin started going up. So now Bitcoin is a essential safe haven asset. Well, it looks that way. All right. So now. So let me just continue what I was saying in the article here. All right. So okay. The global economies such as the eurozone have kept interest rate at 0% for many months now, and because the eurozone is really not doing well, so the ECB, the European Central Bank, they're compelled to keep interest rate at 0%, because if they don't do that, then it's going to be worse. Their economy is going to be in worse shape. So globally, there has been a lowering of currency movement, and that is the reason why the U.S. Federal Reserve has been cutting interest rates. In fact, the way things look, there will be another round of interest rate cut in the near future, or interest rate cutting. At the end of the day, the central banks, they're trying to make sure that their economies don't slow down and all that, because if that happens, then it's going to be difficult for people to find jobs. Their respective stock markets are going to be going down and all that. Speaking about that, the fact that the Federal Reserve cut interest rate this past Wednesday, that's telling us that that's telling us that the stock market, in theory, should go up and should do well. But in actuality, I don't know if that's going to happen, because actually on the day of the cutting, like 2 p.m. this past Wednesday, actually the date right now is September 22nd, and I'm recording at 5:15 p.m. Eastern time. All right, so when I say this past Wednesday, just look at your calendar and you'll know exactly what I'm talking about. Right. Yeah. So as soon as the announcement that the Fed cut interest rate, guess what happened to the stock market? The stock market went down moments later, moments after. You know, but that's to show you, man. Trading the stock market. You ever hear the saying? Uh, Sell the news, buy the rumors. That's a perfect example of that. All right. So even though I'm not a professional advisor, investment advisor, what I'm saying, I have no clue what I'm talking about. This is what I usually hear. This is what I read, and it makes sense. All right. The news that the interest rate cut by 25 basis points, the market went down. All right. But in theory, the market is not supposed to go down because if the Federal Reserve cuts interest rate, that means the American dollar is the value of it is lower. And in that sense, in bond investors are not going to buy the dollar. You know what I mean? And but that's good for the stock market because that will lower the interest rate, probably discount rate, and all that, and that will cause consumers to get loaned easier from banks, from commercial banks, and so forth. And when consumers have lots of money in their pocket, guess what? They'll spend more. And the thing is, the economy is run on loan. You know, the ability to acquire loan, to get loan and acquire loan. So, so if if the interest rate goes is lowered, it's cut. That means in order for someone to get a loan, uh, the requirement is going to be much easier because the interest rate is going to be lower, and it's going to be easier for the bank. The bank usually when the Fed is cutting interest rate, they're encouraging the bank to give loans. You know, and I heard too. I was reading a couple like a day ago or so that the Fed also injected some money in the system, whole lots of billions of dollars. I have to go back and look at the article, but yeah. So right now, um, the state of the economy, my perspective is that this is my opinion. We're at an expansion phase. We're in an expansion phase right now. So and any moment we could hit that peak of the business cycle, and when you hit that peak, man. Bad things can happen after that because the economy could start going down, and if inflation isn't kept under control, then it's not going to look good. Then we're going to enter a phase called stagflation and all that stuff. You know, so that's why the Fed is doing what it's doing. It's trying to even if we dip into a little slowdown, the slowdown doesn't take a long time. We'll just pass through that. Yeah. So and here, all right. Let's get back to the article. What did I write here? Okay, I said. On the other hand, the Federal Reserve will mainly cut interest rate when they think the economy is on the verge of doing poorly. So I think I don't know if I had gone over the existing home sales for August. Let's just run over it again. I'm not 100% sure that I went over it. All right. Let's talk about existing home sales first. All right. The existing home sales for August beats forecast of 5.37 million with an increase of 5.49 million, edging out last month reading of 5.42 million. The existing home sales number tell us how well the economy is doing. When people buy homes, they also buy durable goods such as furniture and home appliances. People buy homes when they think the economy is doing well, and they can be confident that they will have jobs to help them pay their mortgages. If consumers think that the economy is not doing well, they won't buy homes. So, they won't buy homes. So, based on the current home sales numbers, interest rate should have stayed the same because obviously the economy is doing well. All right. On the other hand, the Federal Reserve will mainly cut interest rates when they think the economy is on the verge of doing poorly. Therefore, the Fed may have seen something in previous economic data releases that prompted them to cut rates. We don't know. We don't know exactly. Um, was it the last ISM Purchasing Managers Index, the PMI, of manufacturing data that came in below forecast, or was it the last new home sales data that didn't beat forecast? A combination of these two economic factors and others could have been the driving force behind the Federal Reserve cutting rates. Okay, so let's get down here to the final paragraph of my article. All right. So here I said this is the final article, the final paragraph of the article. Here I said ask a question: is the Fed's cutting rate because of pressures from President Trump? Well, or is the Federal Reserve cutting rate as a result of uncertainties presented by the ongoing trade war between the U.S. and China? It seems as if all factors mentioned influence the Feds in deciding to cut rates. Therefore, the Fed is not merely cutting rates as a result of an unhealthy U.S. economy. Instead, the Fed is cutting rates as a preventive measure against a possible economic slowdown that could occur as a result of trade wars, currency wars, and interest rate wars. So, so I, I think that Mr. Trump resentment and disagreement toward the Fed really has no bearing on the interest rate decision by the Feds, because the Feds are going to act independently from the president and do what the Fed is going to do, and do what they think is the best thing to do in regards to adjusting, implementing different monetary policies. But President Trump, he does have some power at his disposal. So with fiscal policies, I can't speak. He can either lower taxes. He in Congress could come together and lower taxes, or he could start some projects, building streets, highways, and all that stuff to start to jumpstart the economy if you think that that's necessary. All right. So again, my name is Glenn Ford Robinson, and this is my first video. So this is my inaugural video from my Mstardom Finance website. This is what I'm passionate about. So I just cannot help myself. I write articles all the time. So now I'm just talking about what I wrote. This is just my opinion. Please do not take this as investment advice, because I'm not a professional advisor. I'm just a fan of economics. All right, and what's happening in the economy. All right, so I will see you next time, and hit the like button, subscribe, and post some comments, man. Let me know if what I'm doing, if whatever improvement I need, just let me know, because criticism is good to help you improve. All right. So again, see you. I'm Glenn Ford Robinson signing off. Thank you.